Hey, morning everyone. Good morning everyone. How we all doing? What a rip in the markets. It's Thursday, March 7th, and overnight these markets rallied very, very aggressively. It looks like just one straight move to the upside from this 86 area on the S&P 500 futures all the way up into that 5136. All right, it's a 50-point move. You got a 50-point move on the overnight session that happened pretty aggressively, pretty vertically, with minor to little to no pullbacks realistically. And now we're coming into an area where we failed yesterday. So quite the rally, quite the movement, quite the chop as we wrapped up day one with Jerome Powell yesterday. And into the end of the session, we got a lot of sideways movement and a lot of sideways flips on the docket. So the Fed's fairly restrictive monetary policy is still putting pressure on economic activities and inflation. Cutting interest rates too soon could cause a lot of damage. Right? That's according to what Jay Powell said yesterday in his testimony before the House Service or House Financial Service Committee, where he reiterated that there was no evidence that the economy was falling into a recession. So it may also be appropriate to begin dialing back policy restraints at some point this year, but the central bank needs greater confidence that inflation is moving sustainably towards 2%. So Fed Chair Powell pretty much stayed on script realistically, although he did seem to put a little bit of kind of barriers and distance between and around the dot plot from the FOMC's December meeting. So we're still in a position where the expected rate cuts are not really set to come in until the summer, and Powell's moving accordingly. We haven't seen a lot of the Fed members actually have been very quote unquote data dependent and pretty much wait, or I guess needing a few more months. Remember, Christopher Waller was one of these Fed members that said that, needing or wanting a few more months of data to get a better understanding of what it is that's going on, right, to make that decision. Because you start cutting too soon, like Powell said, mentioned yesterday, we're going to expect decent downside in the overall market. So why cut when at these higher rates the market continues to coast and runs into all-time highs pretty much every week? So today is going to be day two of Powell's testimony. We'll see what he has to say, and realistically, he's going to be coming on at 10 a.m. Eastern, if I'm not mistaken. And based on the recent volatility in the markets, right, flips to the upside, flips to the downside, a lot of chop in between, especially yesterday's close. The expectations for choppy waters ahead based on these macro events is fairly high. So today we have Jerome Powell's testimony continues, which starts off at 10 a.m. Eastern, and then tomorrow pre-market we have the NFP report. Leading into that NFP report and leading into the weekend, I honestly expect to see some more sideways volatility, regardless of this market ripping higher aggressively. 50 points overnight from that low with like pretty much no pullbacks. That's a huge move. The NASDAQ up what seems like almost 200 points, right? Massive, massive movers in these markets on the overnight session with fairly little to warrant this. So I'm expecting choppier waters ahead, expecting more volatility, and in accordance to that, I'm most likely going to be sizing down positioning and looking for more concrete areas and moves. When you get this a very aggressive up move, we're very close to all-time highs. These aren't necessarily areas you want to be super active in on the fade side just yet, right? You need a little more information. So keeping in mind what we have news-wise into the end of the week, right, into the weekend, a lot of traders, right, have been struggling. So it's something that's suggestive to kind of lean off, take the foot off the gas in terms of activity, trades, and size, and just let these things settle down. Most likely, you're going to want to see some kind of expansion out of a distribution and get ahead or get away from the news that we have into the end of this week and just go into this with a fresher mind. So there's also some news out of the SEC, right? A proposal that's been pitched for years now, but the SEC has finally been okay with adopting new rules that will require many publicly traded companies to disclose climate-related risks in their financial statements and annual reports as well. So lively debates and legal threats have surrounded the updated framework, and there's still some confusion about the guidelines. On a basic level, the rules would provide investors with consistent, comparable, decision useful information and issuers with clear reporting requirements according to the agency. But not everyone is happy about the new requirements. So, in terms of a quote, the SEC is merit neutral. We're agnostic to climate risk itself, but we have a role to play in disclosures made by companies, and that they have proper controls around those disclosures. This is what Chairman Gary Gensler declared, and it's about investors making investment decisions and what risks it poses to investors. It's grounded in materiality, a multi-decade-old concept that companies disclose that which a reasonable investor would consider amongst the total mix of information. See, when I read this, when I look at this quote, it seems like a bunch of bullshit and a bunch of mumbo jumbo, right? Realistically, with all these like climate initiatives, what was that thing? Like sustainability metrics. I think like Nvidia was like at the top of that list. I feel like it's all very, very kind of fluid information that doesn't have necessarily any concrete backing. That's necessarily my opinion on it. I don't necessarily think that's going to affect the markets in a positive or negative way. It's just another threshold that they're adding in terms of regulations. And looking at this, right, we might think that some of this news has something to do with this upside momentum. I highly doubt it, so we'll see how this transpires. But it was something on the docket. The main piece of information, news that we're going to be keeping eyes on, are going to be Jerome Powell and the NFP that come out tomorrow, and this massive, massive upside move in the overall markets. Right, everything's continuing to the upside. You have big tech that's continuing to the upside, other than Apple, I guess. Right, Apple here. Nvidia's holding out well, but what's Apple up to, right? Apple, okay, it made a nice little move off those lows, but we're still under that 170 area as this thing's continuously catching an offer. And I think that Apple, right, as an outlier, has the ability to spring this thing back up, or spring itself back up in relation to what's going on with the overall market in itself. Now, very important stuff, right? On the overnight session, massive, massive bid, no offers to be seen. This upside momentum has just opened up, and it doesn't necessarily look like we're in a position of weakness at all. However, when you look at it, we're in our first area of potential downside momentum. I'm not saying that we open the market and we start shorting all these levels blindly, but into this mid 30 on the S&P 500, we're coming into a barrier where yesterday, yes, we failed, and there are traders that are getting trapped into these highs, along with we have volume building up and the ledge of a larger, or I guess minor, distribution that had formed in recent days. I'm not saying that we're not going to continue higher. I just think that on a buy perspective, if these guys are going to want to hold it out, it'd be great to see some kind of pullbacks as we are outside of balance and these distributions, with the expectation that we're going to see that upside momentum drive and potentially even higher into a new high, targeting that 5188 area, 5200. That's one of the main targets. But one of the main things that's stopping me from getting super extremely overzealous on the bull side with this is that there's just a lot of data on the forefront here that we have to be cautious of and be aware of. And it's something that can inhibit a lot of chop in these markets and put this thing on the sideways path, rather than seeing too much of a trend, rather than seeing too much of this upside. So initially, I want to see if they're going to pull this thing back. I want to see if everything's going to kind of level out a bit before that buying steps in. If they just start buying off the open, then realistically, you're going to gun for all-time highs in the morning session as we await for Powell. So we'll see how that transpires. I'm going to size down realistically, going to trade smaller, more selectively today, as I think it's been a fairly hard week. There's been a lot of volatility and sideways rotations in these markets, and I think that the stagnation and the the volatility in this market and the sideways chop is going to persist into the end of this week, right, until we get some of that news, some of that momentum. So I'm just going to trade smaller, and I suggest you guys keep an eye out on that, since we're coming into periods of news, right? Large events. So, hope everyone is doing well. We're going to open up our live trading room here in just a moment. I hope to see you all there. Powell will do another QE. That'd be interesting. Realistically, there could be something in the works, but I think that they're going to have to see how the inflation cycle comes back around once they start cutting rates, right? Do I stand by my projection plan of 2024? Yeah, I'm still on it. We've been kind of coasting a little higher than I expected, but I think that the market's due for over the next like few months, a decent pullback anywhere between 4,200 and 4,500 on the S&P, on the SPX. I understand it's a very wide range, but those are my targets. That's my opinion. There are triggers that would let me know that it's happening, so I'm not just blindly shorting every rally. So keep that in mind. So yeah, hope everyone is ready for Thursday, excited for the day, and excited for the week ahead. Let's open up our live trading room, and I'll see you all in there as this thing continues to catch a bid. So be cautious, be careful, don't blindly just fade everything.